All right. So when I first started in this industry maybe 15 years ago, the guy I was working with at the time, he said, you know, there's only one way to be sure your stock price is going to go up. There's only one way to do it. This is the first day on the job for me, so this guy's giving me the keys to the kingdom. And there's only one way to be sure your share price will go up. I said, well, what's that? Make sure it's a good company. Starting tomorrow, you can go to PDAC, you can visit 1,000 companies, hear 1,000 stories, and the funny thing is they're all going to sound good, every single one of them. But we're in this industry, as Tommy was talking about, where failure is the norm. Outside in the jungle, extinction is the norm, but here, failure is the norm. So how do you tell a good company from a bad company? In fact, no matter how much I botched this presentation this morning, it's going to sound pretty good. How do you tell a good company from a bad company? For a development company like the one you're about to hear about, I think it comes down to 3 key things: permitting, costs, and management. Permitting, costs, management. Those are the pillars. And as we go through this presentation on Excelsior, I'm going to try to differentiate ourselves and show you how Excelsior excels in these areas. So we are a copper company. We plan to produce pure copper cathode sheets, just like you see right here. And what makes our story special is that we're not going to dig this copper out of the ground. We're going to pump it out of the ground using injection and recovery boreholes, just like you see right here. You may be familiar with this in the uranium industry. And because we can mine our deposit this way, because it's amenable to this kind of mining, we expect that our operating costs and our capital costs will be industry leading. We're looking to be one of the lowest cost producers of copper in the United States, one of the lowest cost producers of copper in the world. That's the backbone of our story. We're in Arizona. One of the reasons why our capital costs are so low is because the infrastructure is already established on site. Road, rail, power. It's already all there. And you see an example of that in the bottom right. That's the Union Pacific Railway. It runs right through our property. And what you don't see in that picture is the key to our permitting story. You don't see any houses. There's no people around. And that's very important for you as investors, because I think the number 1, number 2, number 3 question you should ask any company is, what is the permitting environment? Can you get permitted? Because 9 times out of 10, when a company gets held up in the permitting process, it's because of community pushback. We're in a very remote section of Arizona, and there are no people nearby. So this is a little different than a standard story. That you've probably heard this line before. A company will say, hey, we're building this mine, and the community is all behind us. Everybody's on board. That's not what I'm saying. What I'm saying is we're in an area where there is no community nearby, and that is why we expect to have a smooth permitting process. So this in situ recovery, if it's so great, why doesn't everybody do it? Well, the fact is everybody would do it if they could, but it's very rare to find a copper deposit that's amenable to in situ recovery. It's a true geological anomaly. We really have only seen these kind of deposits in Arizona. If you find one, fantastic for you, because the costs are great. We're looking to produce copper at less than $1 a pound operating costs. How do we get there? We get there because we're not spending any energy on moving heavy rock and dirt. Capital costs are also about half compared to a conventional mine. So we're in southeast Arizona, Cochise County. It's a very remote county. If any of you have ever been there, it's because you were driving through it. I'll just focus quickly on the deposit itself. 3.6 billion pounds today in probable reserves. There's another billion pounds in the inferred category. So it's a big deposit. And there's no real risk to the deposit. We've got the metal now, more than enough metal for a 20-year mine life and beyond. The grade, 0.29, is not high grade, but we're not mining the host rock. We're just skimming the top, skimming the copper off the top. So what we're actually doing is high-grade mining. That's what the project looks like. You're all invited to come down for a site visit. It's very accessible. Just pull off the highway. It's right there. That's what it looks like in all directions. Again, no one lives within 4 miles of this project. We have no significant community issues whatsoever. No one is using the groundwater for drinking water, and no one's using it for agriculture. There are no water wells in the area at all. We cannot contaminate anyone's water. We've done biodiversity studies, no fancy bats, no fancy cacti, no ocelots on our property. We've done anthropology studies. There's no native burial sites. This is an ideal location for a mine, and I know that everybody says that. Everyone will say they've got a great location. Someday someone's going to stand right here, and they're going to say, we're going to put a mine at Bloor and Young. Fantastic location for a mine. But we think we do have a very good location here, proven out by the fact, and it's kind of visible on the screen, but right beside our project is an open pit copper mine. So we're not bringing anything new to the area. This is the result of our pre-feasibility study. It came out 1 year ago. Industry-leading numbers. You see the NPV of $820 million. That's 30 times greater than our current market cap. So I know that all the companies here today are selling opportunity. That's the value argument for Excelsior. Our current market cap is 30 times less than our NPV from our pre-feasibility study. All industry-leading numbers, all revolving around that very low operating cost you see there of 69 cents a pound operating cost. I do not know of a copper company today that's operating, certainly not a pure copper company, that's operating at those levels. So Excelsior is all about low cost. It's all about great economics, and that's how we want you to judge us. We want you to judge us on the economics. That is not normal for the junior space. Juniors want to be judged on volume or where gold is going. We want you to judge us on the economic viability of this project. How much money is it going to make? And that low operating cost is also key to our risk management. Copper can come down way further than it is today. We're still in business. All the infrastructure that you see there on the left-hand side, the well field, the processing facility, all of that is off-the-shelf technology. There's nothing new here. This is not a science project. We're not reinventing the wheel in any way. So I did talk about permitting. I talked about costs, and I'm going to finish up here with management. And of course, everybody again says they've got great management. What I like to say instead is that we've got a real management group. I'm from Vancouver. Every single tower, if you've ever wondered, every single tower in Vancouver is filled from the top to the bottom with junior mining companies. Now, there's some vacancies these days, but that's what's in those buildings. The vast majority of the people running those companies have never put a mine into production. The vast majority never will. These gentlemen here, Stephen and Roland, they have big mining company pedigrees. They've operated mines, they've opened mines, they had their own nickel mine that they put into development, put into production, sold that mine. They have genuine operations experience. It's a real management group. So we have been trading around 25 cents now for quite some time. What I want to point out here is that Excelsior raised $17 million last year. $10 million was raised with a private equity group out of London called Greenstone Resources. Greenstone is a combination of ex-Xstrata mining guys and ex-JP Morgan investment bankers. In fact, the ex-vice chairman of JP Morgan Europe is now on our board. They invested $10 million. They did it at a premium, no warrants, no options. I often hear this at the conferences like this. What's the smart money doing? For me, a fund that's made up of ex-Xstrata guys and ex-JP Morgan guys, that's the definition of smart money. And to date, we are the only investment that they've made in this space. Also, when you're looking at bull markets, during good times, it's very easy to get projects financed. You can have a marginal project, you can have a good project, people are throwing money around everywhere, everything gets financed. But in challenged markets, like the one we're in right now, generally only good projects get financed. And last year, Excelsior raised $17 million. What are we going to do with all that money? Well, it's full speed ahead with our feasibility study in terms of hydrology, metallurgy, a resource upgrade. All of this data will be in by Q2 of this year, so it's all just right around the corner. We plan to file for our operating permits in Q3 of this year, so it's a very busy, very critical year for Excelsior with lots of deal flow. As I said off the top, we're talking about good companies. If you're not investing in good companies in this market, I don't know how you sleep at night. In terms of permitting costs and management, Excelsior truly excels. I'm here the rest of the day. We're at PDAC. I hope that you'll come by and say hello. Thank you.